It is 9 o'clock on the 26th of April. Let's kick things off with a little poll report. We know trading, please know as you trade capital only. You know the dealio. Let's get into the market. Pretty wild week when you think about it. Let's look at the weekly candles. So huge sell-off last week for all the major indexes. This week we're still holding on to green. If we have today's open around 507, which is about $4 pre-market higher, which is just shy of an entire day's trading range. Yesterday we had a $6 gap lower, I believe, and we ended up working our way back about $5 of that gap. So here was a close at 505. Open at 499, drifts down to 497. Benji's gonna say hi, and then closes up towards 503 and change. Pretty wild day, 504 and change before fading back down. So here we are, pushing higher, filling the gap. Nice thing is this week, I said as long as we stay above here, I thought that we would be below here. That's kind of the line in the sand from the floor. And if we have the daily chart makes it look like we have a high, low, lower high, lower low, lower high, and we're kind of playing around with this area, whether or not the bears can still defend. If that's where the pressure comes in, will we see another lower low? It's possible on a weekly time frame. Stretch this out a little bit further. We just had kind of one big drop. So this was drop. We've pulled back this week. And today opening up at 507, are we getting up towards this 512 level? That was my technical spot for the SPY, was around 512 and change, 512 and 512 to 513. That line's sitting at 513. So even if we open up today at 507, bulls try to push it higher on the backs of two mega cap stocks, Microsoft and Google, coming out with positive earnings, which was really a big flip from Meta. I am certainly happy that I closed up profits on Meta yesterday morning because they were back into no man's land as the gap tried to pull back a little bit. So here is a SPY. Pre-market higher, futures up in the morning. Here are the Qs pulling back as well. 428.79 pre, which is up around $4. Previous level around 432. And kind of a daily mess this week where this was last week's close. Pull back on Monday, Tuesday, indecision on Wednesday, big drop on Thursday, but filled that gap higher today. As long as we are hanging out here for the day, lower than that level, we will see. It's a Friday. There's a potential gap fill right there. Let me turn on my options platform here. See what that looks like. See if I can find some big levels to trade. The DIA as well. Didn't press any fresh lows on that 30% retracement level up to 381. I'm gonna set a chart up here on the DIA around 385.75. If we start to get back into this, this was the support level that was broken. So break, retest, gapping lower, maybe some indecision for now. But if we're gonna hang out here for a little bit, bears would have to take it lower than this new floor at 377.50. Bulls could come back and recover above 386, possibly work its way back to the highs again. We shall see. So let me set a chart alarm here around 386. And some chart alarms down here at the lows around 376. That's the DIA, IWM. About 60 cents up on the day pre-market. This would have to get back above 199 to 200. Let's put a 199.50 alert. Should be right up there. Or not. Add alert, 199.50. Oh, I guess it's right there at the black line. Okay, so alert there, and then it's surrounded at top and bottoms as well. Back to the SPY SPX for a moment. Where are my gamma levels? So if I go gamma levels pre-market, we're looking to open up around 506. Is that right? SPY 507 will be the open here in about 24 minutes. So 507. All right, so my big gamma level today is at 500. 507 to 500. I mean, that's a full day's trading range. Not saying we're getting there because the real-time data could be updating. As soon as we have an open at 507, we could have some gamma levels up here start to populate. We could see that the call option volume sentiment is much bigger to the upside than it is downside. So, this is what was challenging about yesterday. Looking for some follow through, you didn't get it. So we had break lower, gap lower. As soon as this opening bell range was broken, the market just drifted higher for the rest of the day. I did price out a long strangle. I talked about this in Equities on Demand. We looked at some earnings plays yesterday, and it was trading for like $2.20, $2.30. I think at the early stages of the morning, like 9:30 to 10 a.m. Eastern time, it was trading like 230 to 250. Later in the day, it was trading up to around 350. So it didn't have to be. I mean, if it was just a bullish trade, that would obviously been a lot cheaper. But going both directions in case there was follow through or a gap fill, directionally the market did cooperate pretty nicely. So anyway, I'm curious to see what today looks like. There was a pretty straightforward trade, looking at a simple opening range breakout right here. So there's your 9:30 to 10:30. We break and go higher, pull back into this level. That was around a $4 move. So, 0 DTE, pretty good day for that. 0 DTE, pretty good day for that. This one would have been a little bit more challenging. This one, pretty solid. Pretty solid. So, I mean, having the daily trading range sitting at, $6 on the SPY is pretty nice. And so, 506 today, are we going to open and just press all day? Are we going to open and gap fill today? I'm not sure, but I'll see what prices look like. Overall, it's been a pretty good week. It would have been nice when we looked at. Let's see. Let me look and see when I canceled a trade on Google equities. I know we were looking at just a credit spread on Google. It would have been deep in the money credit spreads with the earnings play, and that would have been pretty nice. I'm pretty sure they blew through. Nuts. It's in Telegram. I didn't type it up there. We canceled the trade, but it'd be similar to what we saw with Meta yesterday, where in the money credit spreads were looking to pay out. So we canceled Microsoft, Google. Oh yeah, so 167.50 by 165. Google is gapping up in the 170s right now. So we're up to 174, and we were doing an in the money bull put spread that was trading for around $1.75 out of 250. So was it Google at 350 or 390? 350. Okay, so Microsoft, you're trying to get 390. Google trying to get 350. Anyway, that would be, you're going to lose. This one was trading for about 70 cents or so, 65 or 70 cents. And so that would be a loss of maybe a 25 to 30 cent credit spread. And then you have the other one that you'd be locking in close to $1.75 or so, give or take, $1.75, $1.80. But I didn't take the trade, so no big deal. Anything would have worked. It was well beyond expectations. We calculated about a $10 move, $10.25 to $10.69. That was the earnings expectation. We're up about $18 with the open today. So if it stays where it is, if you were long in any capacity, even both directions, it blew through the expected earnings. So this would be a good trade to be, reverse on your condor, long only, call option only, whatever. Call option, I'm curious what it would have asked you to pay if you were long going into yesterday's close to take on earnings. I do wonder what just a simple call option, even a long strangle, long straddle would have been asking for. It probably would have been like a $10 or $11 debit. But the nice thing is the market exceeded that, so there's still some bucks to be made. So when it, costs you $10 and it prints almost $20, it's good profit. But that's what you need to have happen. Easy way to trade earnings. If you get these big expected moves, is to not call the top or bottom, try to contain it with the expected move. That's what makes earnings tricky. So anyway, it is what it is. We have some good wins. Win on Meta. Win on let's see what else. Spotify this week, and then very active in the indexes. So SPX carved out a nice winner down here at 48.10. This 51.65 didn't fill. This was a sell trade going into this week. And this one didn't fill at the credit that I wanted, so it's deteriorated enough that I don't think this is going to get filled. It's done at this point. But the 48.10 is going to be full credit. The NDX got filled on both sides, and as long as we stay below 17,850 and stay above 1660, that's $1.75 credit this week per contract. Happy with that overall. And an update is always good. We should have some green in the portfolio. Currency strength. We have the Japanese yen overnight. Let's switch gears to currency. Let's see here. I'm in the dollar CAD buy, hit the 618 on the 4-hour chart, looking to break the top. That's good. Let's go dollar CAD. So I got long dollar CAD as well in the flex trading room. We put that trade in yesterday, and I'm treating it like this. I bought right around this pullback, and I'm looking to buy again at this pocket. So trade 1, trade 2, stop losses below this channel support. I'm looking to see if this is low to high, pullback, and then another push to the upside. 1.40 is my profit target. If we break above this, we have had a range in the dollar CAD for the last couple of years. And if that range ends up breaking, especially if there's a central bank that flinches, i.e. the European Central Bank, or the Bank of Canada, or the Bank of England for that matter, if we see a break, this is a pretty easy way to measure dollar CAD. And it's one way or the other, but I would think economy-wise, we're probably likely going higher than we are going lower. So there's low to high. Take that breakout point. You're looking at a move that projects us up towards like 44 to 4,500. And I'm going to go ahead and put a horizontal line right there. So that's the breakout trade. Let me take the halfway point of that just as a conservative measure. So that's the halfway point, and then all the way to the top is the full. That would be if we break above 1.39, 1.40. Okay. So we have, bulls leading us up into this range, consolidation for the last couple of years. We break above here, 144, 145 would be my measured move. Obviously this looks a bit like an evening star on the weekly chart. If it stays like that, okay, fine. Next week we have FOMC and we have non-farm payroll on Friday. So Wednesday, Friday next week could be pretty big volatility in the currencies market and the equities market. See what the Fed finally says. See how the Fed's going to set the tone for the summer. I think the Fed's still going to push back and be somewhat firm and hawkish. I think that rate cuts are, I don't know. I mean, PCE came in as expected today, but a round of CPI, a round of higher inflation, a round of, everything that looks like it's sticky, right? Everything that looks like we're further away from that 2% inflation target. Fed is still going to stay restrictive. Rates have been on the rise. Yields have been up. I mean, this is the 10-year yield. It has not stopped going up for the last 5 weeks. So the last time we had a yield rally into that 5% level, markets were falling. So we're getting another rally into that level. Markets have fallen a little bit. It's contained quite a bit, but this, again, if this trajectory continues to, pepper this 5% level or even creep up higher, and technically I do wonder if, I mean, I look at the potential pattern here. This would be a 1, 2, 3, 4, 5. If we have a 3 drive pattern getting us up to 5, 5.25, is that what puts in the reversal pattern? I don't know how technical I can trade yields. Okay. But I do know that if you want to trade bonds, you got to be following along with your yields. If yields are up, bonds are down. So as the 10-year is up for the last 4 or 5 weeks, you're going to look at the SHY and the IEF. This is your 7 to 10-year. This has been down pretty hard the last 3, 4 weeks, right? TLT, the 20-year, this has been down the last 3, 4 weeks. So I started to get long here with a deep in the money call option. I think it's around $82 to $83. I still have some higher delta, but it shifted from like a 75 to probably 55 or 60. So it's still in the money. But I mean, actually, it's not really time sensitive for me. I went out to 2026 for the TLT to see if we put a bottom in the bond market. But that's what's happening. Yields are up, bonds are down. Equity is still a decent place to be, investing. There's still some bullish sentiment out there. Mega cap saved the markets a little bit this week, and that's where we are. So, still looking at the SPY for today. Gapping up, and we got about 13 minutes. So if we gap up to 507, I'll be looking to see if there's possibly a trade right here. I might look out to next Friday, the 3rd, and see what that expected move looks like, and possibly put in some butterflies. I know we have good volatility next week. I might look at a butterfly up here in the SPX. Let me shift this up to the SPX. So something where, do I think that price is going to break all-time highs again at 52.70? Probably not. So if I can get a positioning on that, let me see if I can get any credit for that. Well, I guess I'll know in about 12 minutes. So if I made a play that, okay, let's say that I probably won't take this trade until end of day today, if I like it, and that'd be, we have to be sitting right here, okay, and then with FOMC, this is what tends to happen is market's going to move. I think we're going to have good volatility on FOMC. It's just I don't know what direction. Is the Fed going to, I don't know, promise a rate cut and the market's going to love the sound of that, or the Fed's going to say nothing of the sort and the market's going to hate it? So I could see a big indecision candle next week. If the Fed's going to try to talk the market down, be more restrictive, then we can possibly come back into this zone, which I might end up repositioning for. So I might be able to kind of repeat some of these key technical levels on the SPX as well as the NDX, and see if I can get positioned for some decent credit going out maybe a week or so. So anyway, that'll be the trade that I'm looking at for today. What do I think of the Russell? So it's hanging in there. The Russell probably needs a little bit of optimism from the rate cut situation. I think once we start to see that the Fed is at least reiterating that they're not going to raise rates, I think that maybe for some reason the market thinks like, oh my gosh, the Fed might raise rates. I mean, that probability is so slim right now. But if we look at the watch tool, it is on the watch tool. So we're looking at a pause next week with a super high probability, setting the tone for another, wave of inflation data through the month of May. Going into summer trading, pause expected for June, pause expected for July, and a first cut still. I mean, and barely. And this is what might change this week, right? 45% probability that there's a rate cut still coming for September of this year. The Fed's message in May, in my opinion, is going to shift this higher or lower, right? This would be a cut. So if this shifts lower, and this shifts higher, that essentially wipes out the probability of any cuts this year. That, because I mean, cutting in September, having an election in November, finishing out the year, most likely they're not going to make cut at that time. So if they cut in September, okay, interesting. But if they don't and they hint at that right here, then this is probably what I'm going to look at, on Wednesday, Friday next week. Is if they shift the expectations lower and we stay in this pause cycle higher for longer, I don't know how the market's going to like that, and I do think that will affect the IWM. This is small cap. If you've got higher borrowing costs, this is a tough one. So, I mean, I still like the posture. If we have a broad market rally, there's still that potential catch-up trade on the IWM. All-time highs. We've had every index hit all-time highs except for the Russell. The Russell 200 hit all-time highs, but the Russell 2000 not even close. So, I mean, to me, I'm still bullish on the Russell as long as we stay above 163. But there is clearly a lot of space where we could have some noise in here, right? And then that indecision would have to be, proven bullish otherwise. We have to prove it. We have to get above, $200 and change. So the high we had recently was 212. And I'm bullish on the Russell out to January. So if we get a catch-up trade or broad market rally, then sure, let's get up to 230. Let's see if we can pinch these all-time highs at 244. But we also might go nowhere. This might be really, really choppy. So possibly, well, if I could get a better, let me see if I can actually trade the Russell. This is a trade I might look at for next week. So next week on the Russell, I could probably position a broken wing butterfly up here and possibly down here and see if price just stays, choppy for the week. Yeah, we'll see. I'll look and see what that credit situation looks like on this instrument. That could be a pretty good trade. Maybe grab another, 75 cents to $1.50 and stay out of the way like a 10 delta on those pin prices. Coinbase, I mean, has anything really changed in crypto? Not really. I mean, Coinbase is not a stock I necessarily want to be investing in. I think if you invested in Coinbase, you were doing it when it was dirt cheap, and now it's just following along with Bitcoin. If you look at, just take this as a snapshot, right? Take a screenshot right here, or just think about. Here, I'll do this. I'm gonna take. We have up, pause, pull back during the announcement of those ETFs for Bitcoin, up, pause. I'm going to trace this. I'm going to go to a Bitcoin chart and zoom out, and you're going to see it's almost going to be identical. See if I can get that compressed the right way. Trying. It's pretty similar, right? Up, pause, up, pause, up, pause, up. It's the exact same chart. So if you're bullish on Bitcoin, by proxy, you're bullish on coin. If you're bullish on Bitcoin, you're bullish on MicroStrategy. I mean, MicroStrategy is clearly way more volatile, but if Bitcoin is going to continue to push higher, MicroStrategy after some pullbacks in here, this is another one I'm going to look at. I think we can get some credit on MicroStrategy at a $1,200 stock. So we do have earnings coming up this is next week on MicroStrategy. Man, I mean, I do wonder, like, would MicroStrategy be willing to say something about AI in addition to having $5 or $6 billion of Bitcoin holdings in their balance sheet? Would they say something about AI as a tech company and just get this thing to rip? But it's very correlated. So to your question about coin, it's just like being bullish on Bitcoin. So overall, I am. I mean, Bitcoin is pausing. We're sitting here at 63.8. So to me, as long as we're kind of maintaining this area and the posture is still bullish, I just think it's getting through the noise right now, and then we're going to look to see if we go higher. Bitcoin is more correlated to the Nasdaq than I think people give it credit for. So if we start to see that the Qs are gaining, or the NDX is gaining, the Nasdaq, the Nas 100, if all of those are pushing higher, that should also help influence Bitcoin rally. Let me check something on see if it's mining costs. Average mining costs right now So in orange is the spot price. So we've got the spot price at 64,000. We've got the Bitcoin average mining cost at 105. That's way up there. Man, the mining costs have just surged since around. That's crazy. So this shows a surge like coming April 19th into April 20th. That's a big jump. Usually, and this is what I thought was happening, usually we have the spot price just kind of hovering around those mining costs. If mining is taking a big jump and it's not, if mining is going to stay up here elevated, that should be enough to see the Bitcoin price start to rally up, right? So right here, average latest stats, you've got 105.5 on the mining costs and 64 is the spot price. Usually those trade pretty closely together when it comes to like finding real value or fair value of Bitcoin. So again, I mean that's going to be the interesting level as 100K, and a lot of traders, myself included. I mean, getting invested back here at 15, 17,000, invested here again in the breakout at 30,000. If we get up to 100K, that's a pretty good trade. That's another decent chunk to the upside. I will probably be a profit taker up there at 100K. Not all, but just taking off some profits and putting it elsewhere. But yeah, I mean, I'm bullish. So Coinbase is looking the exact same, and MicroStrategy is a little bit more volatile since it's a tech company. But I think I actually might look at positioning for that. We have earnings on it next week, and I'm going to see. All right. Nimmer says Bitcoin average 25K. Nice, dude. Yeah, I'm probably around the same. I mean, I had a cost basis when I first took profit to this 60. Once we tested the 60K high again, I took profit here around 64. I'm pretty fortunate, pretty lucky, just seeing the divergence, and I took profit on that second peak. My Bitcoin cost basis was like $3,900, and then once I started to get back in, I had another chance to participate pretty cheap. I got back in at 30, got back in, at 20. Stayed around 20, got back in at 25, got back in at 30. So my cost basis has gone up from, four grand or so to probably 25. Yeah, 25 is probably my same. But yeah, good stuff. And it's just a trade. But hopefully we can see some direction. Nice. Let's see here. Talk about the BOJ. Well, what's there to talk about outside of they did exactly what I expected them to do, which is nothing. Right? They're not doing anything. They're keeping the rates the same. They probably want the Nikkei 225 to continue to get elevated and try to have a pullback, which we did, right? We broke the trend line, had a pullback towards a 382. I mean, I like the Nikkei trying to get bullish, and the best way to do that is a weaker currency. So here we are looking at, dollar yen trading at 156.80. I saw so many people this week in the sessions I was in, from these YouTube sessions, the A1 trading sessions, and everyone's just like manipulation, watch out for the top. It's like, all I kept saying is, why are you calling the top? Okay, there's more divergence here on the daily time frame. I would keep it ridiculously simple. Like, don't force a trade on the Japanese yen. This currency will absolutely destroy you if you are going to try to fight this thing. So dollar yen, this is a daily time frame, and yes, we are overbought. Okay, but what's it look like on the weekly? We are not overbought on the weekly, right? The last time, and I'm just telling you this, the last time we put in this kind of intervention high, it took 3 or 4 attempts, right? We had 3 levels of intervention as the yen continued to go higher, and then finally the 4th intervention was the big, push to the downside during the holidays. But where we were at on the technicals, we had weekly and monthly overbought conditions with divergence. That doesn't happen very often, right? So I'm looking at the higher time frames. This is overbought on the weekly. This is divergent on the weekly. We are not divergent. We are not overbought. So there is more room for this thing to stretch. I've been saying 160 for the once we broke above 152 and took out this high, I was saying 160 is a possibility. 170, if you look back to like the 1980s and 1990s, you've got highs at 170. So I don't think it's a trade that you want to fight. Like, stop freaking worrying about the top and the Japanese yen. Stop worrying about BOJ. It's going to crush you if you keep trying to call the top. If you don't like the buying highs, then don't buy the highs. But if you wait, 3, 6, 12 months, you're going to see the most obvious unwinding of risk off trading. You're going to see the unwinding of the carry trade. You're going to see all these things in this reality check that will happen. It happened in 2020. It happened in 2022. It happened in 2012. It happened in 2008 and 9. Like, it comes in cycles. So BOJ's doing nothing, other than making traders look idiotic by being seriously like sentiment money that's like, oh, where's the retail trader position? They're short the dollar yen. They're short the euro yen. They're short the pound yen. Okay, they're in for more pain. So we looked at ranges this week. Dollar yen's been the clear winner at the 152 breakout. It's now up, almost 500 pips. The other pair started to break out as well. I said follow the breakout. So weekly chart, not overbought. Monthly chart, this possibly. Okay, and I say possibly because I'm not taking a lot of trading decisions based on a monthly time frame, because for a month this could stretch another month, and then finally put in a top, and we're like, oh, see, we saw it on the chart. But it could take another 1 or 2 or 3 months for that trade to play out. But I want the analysis to be, we have a high, we have a high, we have a high. We are seeing lower highs in momentum. We're seeing an overbought condition back here from that 148 high, right? And then we break above 152. We're breaking above that now. I do see some hidden bearish divergence. I don't know when this is going to break, but again, if we go back and keep it simple, oops, that's not the chart. Go back to the weekly time frame. Okay, and this is probably the simplest trade right here. If this trend line breaks, there, that's it. So you're gonna miss the top. If you trade this way with this trend line break, you're gonna miss the top by hundreds of pips. But the amount of stress that you have is going to be minimal, because there's no reason to call the top. Now, if this starts to get ridiculously parabolic, then sure, we might take a couple of stabs at a sell stop, maybe get a head start on this, maybe move the trend line up a little bit more aggressively. Try looking for a topping pattern of sorts on the weekly or daily time frame. But that is it. Look, this is a failed pattern. Left tip, center tip. What do? We came back to test the high, had a chance, didn't follow through. Carry trade is strong. So, I don't know what traders' obsession is trying to call the top of the yen crosses when it clearly doesn't cooperate. The yen is going to be the pair that doesn't love you at all. So stop trying to tell it what to do and just trade what you see. There's nothing bearish about the yen crosses right now. So don't force it. Eventually, look, this weekly time frame and the 200 EMA, these things will come back and balance at some point. But right now is not the time to fight it. You go back far enough on these charts. Here we are talking about highs at 160. Okay, that's back to 1990. And here's a big low from, that looks like 1978. That's crazy. That's at 176. So, 160 is a possibility. Then it's open space from 160 to 170, which is a little scary. Just giving this thing kind of free rein to run and roam. I don't know if we move that aggressively that quickly this year, but I'm not trying to stop it. So anyway, it's fun if you're long. You feel like a moron if you're short. So I just trying to help traders stop trying to short these things. Right now in the pre-summer push, especially going through the month of May, getting into summer trading, likely there's nothing going to change this thing. This momentum's been established since, March, April. So it's likely going to stay in motion through the rest of this month, rest of probably next month. Yes, we have the Fed on the 1st of May. I don't see the dollar yen all of a sudden changing. I don't see the dollar. I don't think the dollar is going to breeze into the JPY unravels. Just my thoughts. And like I said, I go back to the markets. The 225, the Nikkei 225, it's probably in the worst interest of the Japanese economy that would happen. BOJ doesn't want that to happen, right? BOJ rally. They're looking for higher highs. A weaker currency helps them get there. There's so many good incentives for investing in Japan right now. Again, be long equities, and you kind of have to because your currency's so weak. So, will it unravel at some point? Sure. And will we find it? Yes. Are we going to pick the top? Probably not. But we'll see it on the trend line breaks. Okay. All right, there you go. Vincent says, I'm not taking it now. Maybe if there's a pullback, then again. Yeah, maybe. If there's a pullback, and that's the tricky part is pullbacks come in like overnight spikes. This was a pullback we had this week. It was like a 1-day spike right here. So we had a spike lower, and then it's up to fresh highs. We had the same thing on Swiss crosses. A lot of times the yen, when it's in motion, it does this. It's flaggy. So pushes up, pauses, pushes up, pauses. Go to the smaller time frames, you'll see the same type of behavior. When we broke above 152, okay, here's your breakout above 152. Does this look like pullbacks to you? There's 152. Push, pause, push, pause, push. It's flags. Doesn't really get a lot of pullbacks. So this is what makes it so challenging. It's just sometimes it's a very tricky currency. Now, did this actually happen? Tick data wise, did this happen last night? Looks like it. Why I don't see that in any way, shape, or form on a 5-minute chart reflected with currency strength. There it is. Right there. So that downside, upside, downside, that's a lot of noise from BOJ last night. So it did, crazy volatile. What is it? I guess your pullback is buy the flash crash low. 185 pips to the downside. That's now back up to fresh highs. Was there some type of intervention? I guess one last thing we can look at is, did they say anything? They hinted at intervention in late 2022. Let's see here. Rates, futures, contracts, prices, and a firmer chance the Fed will deliver a first rate cut September. Let's go to BOJ. Futures jump as tech giants soar. Yen plummets. BOJ refuses to prop up crashing currency. There you go. Okay. Well, that's from Zero Hedge. Positive sentiment carried into European trading. Tech stocks leading equity gains. Miners outperformance. Copper hit $10,000 a ton for the first time in 2 years. Speculating whether Japan will intervene, support the yen if the currency slid to 34-year low. Huh. It's all pre-market. Bullet points here. Anything on the BOJ. That's all stocks. Big companies. Almost 80% of the S&P firms have reported so far, have beaten analysts' earnings expectations. Stock price reactions have been underwhelming. Better than expected results seen below average upside. It's true. The big highlight overnight was the session. Latest collapse in the Japanese yen, which fell to a fresh cycle low at 157 versus the dollar. Bank of Japan stood pat on interest rates, and Governor Ueda did little to push back against recent weakness in the press conference. The yen slumped to a record low versus the dollar has left traders on guard for any hints of intervention from Japan. Yen swung sharply from the day's low to high amid jittery trading. Is that the type of currency you want to sign up and trade? Just saying. It does make it so challenging. It's like I think traders are like gluttons for punishment if they think like I'm gonna trade this. It's so much good luck. If you're getting 1 to 5 minute moves like that, good freaking luck. It's not normal. So I just think it's easier just to stay the heck out of that stuff. It's not the level, but it's the speed that will trigger the action. Should the yen fall further from here, like the BOJ decision in September 2022, possibility of intervention will increase, said Suzuki chief currency strategist from Banking Corp. Okay. Well, it's out there. But again, the last thing I'm going to try to trade is talk from a BOJ, talk from the central bank. What we're going to do is we're going to see it, right? This chart right here, this is when you saw intervention. Intervention, finally broke. Look, it finally broke a trend line. That's all it is. I don't know why we're spending so much time on this when the reality is don't fight this technicals. Don't fight it. If it breaks a trend line, we'll look at it again and it's like we'll see intervention levels. But if you're trying to pick the top or bottom here, good luck. Not my preference. So there you go. There's my Japanese yen summary for the day. Cool. All right. That's it. Stocks are open. Let's go pre-market, or not pre-market. Let's go opening bell. Here's my 9:30 to 10:30 range, looking to get established. There's a low of the day, high of the day. I'm going to see if I can price in. Let me look at a straddle or strangle today. See if I get something long if we have enough volatility. It's Friday. We pull back to 504, pull back to maybe 503.50 and fill a gap today. Let me check something for gap fills. Let's go gap fill by weekday. Most of the time, Fridays, we have gaps up, get filled. This is, let's go 5 years out. How often do gaps get filled on Fridays? 57% of the time gaps get filled on Fridays. Now, what's the percentage of the gap fill? This is another thing I want to look at. So if I go to today's price, so we have close here. And we opened. So it's about a 0.59, almost 0.6% gap. So that would be gap fill by size. I also posted a video on this. This is Edgeful. I posted a video on this called, how I trade zero DT and weekly options. I spent about 20-25 minutes on Edgeful if you'd like to take a look at this. And then in May, I'm going to do a couple videos with the developer and post this on the channel as well. So it's a 0.59% gap, which puts me here. 0.59% gap shows now we have about a 40% chance that the gap gets filled, 60% chance it does not get filled. So the way I read that information would be, to me, this is a large enough gap that we probably won't come back and fill it all the way. But if we do, and this is what I'm going to keep an eye on, here's one thing I would look for. Let's say that for the day, this gap bullish is a pretty good sign, right? So in the context of where we are on the SPY, we're still in a pullback area, meaning this. We have sold off from high to low. We're still in a pullback area where even if the bulls want to push this higher, I think the bulls are pretty limited to this 513 level. If we pull back there, that's past support becoming resistance. And, the bulls would have to overtake that level. And that's your, kind of bottom is in, or this rally is not, or this decline is not done. And we go high, low, lower high, lower low. And that would be, more of the correction that played out like we had in, summer, fall of 2023 and most of the entire year trading of 2022 is the market does move in waves. And so we could have a high, low, lower, high, lower, low. Okay. NVIDIA's filling gaps. Oh, that was a weird alert. NDX gap fill. Okay. NDX. All right. So we have a gap to the upside. Gotcha. I need price to stay below 17,850 today. Let me see what that probability is. Should be good to have that trade close out of the money and be full profit today. Okay, just getting loaded up on the broker session. buy price really quickly. Vincent says if there's a break in the uptrend, I dare to take it. Yep. What was the crypto commercial during the Super Bowl in 2022? Was it 2022? Like what is it? Something favors the bold. Whatever. That was an. All right. Let me take a look here at the SPY. Positions, trade, anything for today. So right now we're at 507 and change. If I buy, it's going to cost me 266 on the day. The gamma level that I see is 500 on the. Man, this is just a tough one. So I'm floating this out here. So if we're going to have direction on the day, here's a 508, here's a 511, and a 512. I mean, those are the real-time gamma levels that are coming in right now. So as a directional day, like this would likely be the pull for the market as we push up into that 510, 511, 513. I said that 513 level on my charts here. That's where we had. Come on, SPY. That's where we had the previous floor, right? That's exactly 513. So if we have a close yesterday at 503 and change, we get up to 513 today. That's a $10 move over the course of a gap and a directional day. I don't know if the market has it in it today to get up to 513. That'd be another, $6 or $7 push in addition to a large gap higher. Obviously anything's possible, but for the week, have we pushed a weekly trading range? So the low of the week has been 495. The high of the week is 507. That's $12, which is exactly the weekly average. So, I mean, from that standpoint, I don't see that the market's going to be able to muster up the courage today to get this thing all the way up towards 512, 513. That would be from a low of 495. I mean, that's a huge week. That's an $18 week if we get to 513. Right? So, again, not my job to call the top or bottom, but I'm looking at if I've got a trade opportunity for today, I would almost rather I'd almost rather see this happen. I'd almost rather see if price can come up here and then fill the gap and fail a little bit. That might be my directional play for the day. So if price pushes a little bit higher, what I might look to do is maybe do an at the money or an out of the money put option, just do a long put and see if this comes back and comes to the low of the day or comes back to a gap fill for the day. So, because I don't think we're necessarily going from a close here, open here, going all the way up to these high gamma levels at 512, 513. So what I'd rather do is see this thing struggle a little bit, maybe at the 509, 510 level, if it even gets up that high, and then possibly take a very cheap long option that might cost me 75 cents to $1. If I'm right on that, we get a gap fill or retest the low of the day. That might translate into, maybe $2 or $3 credit. So I'll just be patient on the day. I don't need to force anything. It's been a good week overall. And as long as my, SPX for right now, as long as we stay below 5165, that's good. As long as my NDX stays below 17,850 and stays above 16,600, my SPX also has to stay above this 4810. So I'm just looking for some income plays this week, and those are looking pretty good right now. So we've got a 78-0 on the call option volume sentiment. AX 53. I feel like you asked me this one before, Thumper. Before? So strong support here around that $36 area. Very strong support around that $36 area. Previous highs all the way up towards 63 or 64. Looks like we got a bull flag in the mix. So, I mean, I think bullish is a decent play, but I'd be protective of profits once we hit, $60 to $63. This is major banks, huh? Interesting. No dividend for a major bank. What makes Axos better than others? Besides being founded and headquartered in Las Vegas. It's got that casino money, huh? Anyway, that's the trade I see. So I would box this in here. And right now with this little push, it looks like a bull flag to me. Have we had earnings on Axos? Earnings are out next week. So on Tuesday, I believe next week. Yep, Tuesday next week earnings. So I will say this. I mean, I'd put this on my radar. If we came back to this low, I would take some positions there. If we get to the high, I don't necessarily want to say it's going to be bearish from there, but if the broader market is still correcting, that's probably a good spot to be, taking bullish trades or taking bullish profits and possibly looking for a short-term direction to the downside. It's a gamble. Aha, pun intended. All right, cool. All right, everybody, I'm going to let you go for today. Little 52-minute session in the Pulver Report. Thanks for being with me on Friday, the 26th. We'll be back next week. Equities on Demand traders, let's switch over to the trading room at 10 o'clock. I think everything's good there. Yep. So I'll see you in a couple minutes. And sounds good. All right. We'll be back Monday at 9 a.m. Eastern time. Okay, before you go, I can post my Discord. If interested, if I got traders out there watching this recording or tuning in live that haven't joined my Discord community, it is free. Free group chat when I go on live on YouTube. I blog every week, Twitter analysis, any educational links for courses and classes I have. If you want to schedule some private workshops with me, private instruction, I do that as well. Save you some money on tools and resources that I reference and showcase all the time, from TradingView to Dynamic Trends to Edgefull to A1 Edge Finder, and all my courses at Market Traders, and then a top weekly pick. So all that stuff inside the Discord channel, pretty easy to follow. Let me show that invite right now. This invite is good for the next forever. Copy. So Discord community, it is Chris Pulver Trading. There you go. Okay, good stuff. All right, everybody, I'll let you go for today. Have a great weekend. Happy Friday. And Equities on Demand students, I'll see you in about 6 minutes. All right, thanks. Bye.